I'm Shay Russell from mining.com.au, and once again, I have the brilliant Data Dan. I've taken him away from the spreadsheets to put him in front of the webcam. Data Dan, it is brilliant to have you back on. How are you?
I'm well, thank you, Shay. How are you?
Good, thank you. We have got some, look at me taking credit for some of the charts that you've spent hours producing. You have some zinger charts to share with us today. One that I think is particularly interesting and foreboding for the Australian minerals exploration sector. Let's talk about the value of it. Now, we haven't done a lot of this before. I know you've got a super cool chart here to show how the value. Tell me, is this increasing? Are we spending more on exploration?
We're spending more on existing exploration and deposits, not so much new greenfield. So what that essentially means that the risk appetite seems to be coming off a bit, and we have the March numbers coming out on June 3. Now this will give us a very good indicator whether or not that value of exploration is going to be north of $1 billion for the quarter. So it's typically between that area, but again, these days, it's really a case of being able to provide a path to production and being able to provide that commercial reality, which investors are increasingly after, given the fact that, for much of the last year, we've seen, like it's been a yield play, like why have the high risk when I can actually get 4 or 5% and a low risk investment. So that's been uh, the big takeaway. But interestingly enough, miners are looking to do more with what they know as opposed to looking for new greenfield exploration. So that's the first takeout. The $1 billion a quarter in what we see in that activity is the very interesting benchmark at the moment. So that's in the first chart. That's provided to you by the good people at the Australian Bureau of Statistics.
Yes, but I love the colors that you've added. Now, I want to move on to one of my favorite metals of all time. And honestly, maybe I'm just not fun at parties if this is one of my favorite metals, but I do love copper and all of the things it tells us about the world. Listen, copper has been on an absolute tear the last couple of months. And granted, there's been some political instability driving it. What are you seeing play out in the copper market right now? What does the data tell you?
It's that one which is hanging in the sweet spot perfectly. So despite all the volatility we've seen in the last 6 months, you're looking at $4.60 per pound, and that's on the Comex uh, data. And again, that's like hovering above $5. And again, normally copper, it never used to be this, but it's been hanging above that level for almost the best part of 2 years now. And again, what that highlights the fact is that demand for copper is not going away. And so, despite every bit of turmoil we've seen, possible, like, a lowering production or an industrial production, copper has remained resolute. And it's also that feeds into that fear that there's just not enough copper out there because so much of copper production, comes from Chile, that Escondida project, which is so significant in terms of its copper output. But for the price of copper, or Dr. Copper as it's often known, because it's a barometer of the world economy, that hangs above that $4.60 mark. And again, incredibly impressive numbers really associated with copper. For so long, it's always been the shadow of gold, but it's got a very, very good story to tell with a price so elevated, and certainly an earnings accretive story for those producing the most famous of heat conducting metals.
And obviously, the end of May approaches next week. That means there'll be another data dump. In particular, CPI numbers are coming out. But Dan, what will you have your eye on? Because I know you like to be ahead of the curve.
I'm looking at the APRA banking data at the end of the month, which gives us an indication of what the lending to business is. It's an extensive report and often gets overshadowed by the credit aggregate data, which comes out from the RBA, but the APRA banking data, because it gives you really where the money's, like the value of lending is really what we want to see, whether that's actually materializing in the business sector or more so for the household sector. So that's what I'm looking at next week.
Listen, Mr. Data Dan, I'm going to want to chart on that next week. Thank you so much for being here today. Love these sexy charts. Looking forward to more of them next week.
Thanks, Shay. Cheers.